Hey people, I welcome you back to another video in which we are solving previous year board examination questions from the chapter Accounting for Share Capital. And now today in this video, we're going to be taking up a question from May 2019 board examination. Main in the sense, the one that is held for all India. Without further ado, let me start reading the question. EF Limited invited applications for issuing 80,000 equity shares of rupees 50 each at a premium of 20%. The amount was payable as follows. On application, rupees 20 per share. On allotment, rupees 15 per share, including the premium amount of 5 and 5. And in first call, rupees 15 per share, and second and final call, the balance amount. Applications were for 1,20,000 shares were received. Application for 20,000 shares were rejected, and pro-rata allotment was made to the remaining applicants. So we received 1,20,000 applications. 20,000 applications have been rejected, which means what we are left with 1 lakh applications. And for on that 1 lakh applications, pro-rata allotment of 80,000 shares have been done because we have only invited shares for 80,000 applications for 80,000 shares. SEMA holding 4,000 shares failed to pay the allotment money. So SEMA did not pay the allotment money. Afterwards, the first call was made. SEMA paid the allotment money along with first call. So that is different in this question, my decision, compared to all the other previous questions that we did. Earlier, what used to happen was in all the other questions that we did, if someone did not pay the allotment money, their shares were forfeited. They did not pay afterwards. But in this question, SEMA did not pay allotment money when she had to pay it, but then she paid it when the first call was made. Am I right? So let's see how to account for that. There is another person in the question, Sahaj, who had applied for 2,500 shares, failed to pay the first call money. All shares were forfeited and subsequently reissued to Geeta for rupees 60 per share. Rupees 50 per share paid. Final call was not made. Past necessary journal entries for the above transaction in the books of EF Limited by opening calls in arrears. So we got to open calls in arrears account, which means I'll tell you what it is. It's a usual thing. Whatever we do, that's what we got to do. Just give me. All right, so let's start solving the question. The first thing is B2, right? In whose books we are doing the journal? In the books of EF Limited and journal, and we give the headings, particulars, portfolio, debit, credit. All right. The first journal entry is always making the application money due, and as you know, receiving the application money, and the journal entry is bank account debit to share application account. It's not mentioned as equity share or preference share. It is not necessary to write equity share application or preference share application. You can just write share application account. Even in the suggested answers, they've only given share application account. All right, so how much is the application money? It is 20 per share, which includes 5 rupees premium, understood. But even if it includes premium, when we receive the shares, when they receive the application money, it is 1,20,000 into the full amount that is receivable on application. You don't have to bifurcate it into premium and capital, because at this point they're just applicants, they've not even become shareholders. Received application money. All right. The second journal entry would be to allot. As I told you in a pro-rata problem, this is the most important journal entry. Equity share application account debit. 2, we credit equity share capital with whatever was receivable as application money. And if there was premium, then you've got to credit premium account also. So securities premium. And then we have rejected certain applications, as we read from the problem, like 20,000 shares were rejected, right? So we got to refund the application money, so to bank account, and whatever is left has to be adjusted against allotment as the question instructs us to do. Shares allotted. All right, my dear children. Pro-rata allotment was made to remaining applicants. The question does not tell that the excess application money has to be adjusted against allotment, but even then, even if the question is silent, whatever excess application money is there shall be adjusted against allotment. And if there is more, if there is application money excess enough, even whatever is due on allotment, that will be refunded. So let's see if there is excess beyond what is due on allotment. If only that is, then the question is silent. If the question says that excess application money should be adjusted against allotment and call, then first we'll have to adjust against allotment, then we have to adjust against call, and even after that, if there is some excess, that will be refunded. Understood? But this question is silent. So what we got to do is we have to adjust against allotment, whatever excess application money we have, we adjust against allotment. And if we have something in excess above allotment, whatever is due on allotment, then you got to refund it, because the question does not tell you to adjust against calls. But that is not an issue here. I don't think we have anything in excess of more than what is due on allotment. First, whenever we, you know, make allot shares in the second entry, we debit the equity share application with the full amount that was, received by us. And in the whatever is received as capital should go to share capital account. It has to be credited to share capital account. You see, in application, we have 20 rupees. Out of the 20 rupees, 5 rupees is premium, which means the remaining 15 rupees is what, my dear children? The remaining 15 rupees is capital. So how much will go to capital? It will be the number of shares allotted. In this case, it happens to be 80,000 into 15 rupees. That is 12 lakh. And premium will be what, my dear children? Whatever amount was received as premium, that is 80,000 into 5, the number of shares allotted. Understood or not? That will be 4 lakh rupees. What will be refunded, my dear children? The entire amount received on allotment on the applications whose shares were, on the applicants whose applications were rejected. Am I right? The question says that we rejected 20,000 applications. Am I right or not, my dear children? So if you rejected 20,000 applications, it will be 20,000 into 20 rupees. The amount received by us on every application, that will be refunded to them, because we are not going to be in touch with them anymore. We received their application, rejected it. Our relationship with them is cancelled. We didn't accept their offer. No contract is getting created between them and us. So we rejected, so we got to give their money back. So we've done that. 20,000 applications rejected and 20 rupees was received from them. So that 20 rupees per application had been refunded. Now, what do we have in excess after beyond that, my dear children? I have 24 lakhs minus 12 lakh minus 4 lakh minus 4 lakh, which is basically 4 lakh rupees. I only have 4 lakh rupees left. What is due on allotment? All these shares is 15 rupees is due on allotment, which means I don't have enough money to set off with allotment itself. And there is no question of I having excess application money, and therefore there is no need for me to refund whatever is excess. I'll just adjust it against allotment. Okay, so the next journal entry would be to make equity share allotment due. Share allotment due. Debit. As I said, it's not necessary to write equity if the question does not mention if the share is equity, which means here this is share cap. So share allotment account will be debited with the amount due on allotment, which is 80,000 into 15, if I'm correct. Go and check. Yeah. So 80,000 into 15. So 80,000 into 15. To share capital account, and there is premium also in this. So remaining to securities premium account. That's eight. So premium is 80,000 into 5, which is, and capital is 80,000 into 10. That is the capital portion of the amount due. So the 15,500 is premium, so the remaining 10 is capital. So 80,000 into 10. Understood? So allotment money made due. Now we got to receive allotment money, but there is a small problem with that. As I told you, one of our friends, Seema, one of our shareholders, Seema, did not pay the allotment money. And there is excess application money to be set off against allotment. When there is excess application money and when there is call scenarios, what are we supposed to do, my dear children? We have to do the working note to compute the call scenarios. Understood or not? So let's go ahead and do that. Now, some people say that we can do this without a working note, but I would strongly recommend you to do the working note for reasons that I know. Students have easily solved this question when they do the working note. It hardly takes 10 to 15 seconds to prepare this working note. Once you've done it, you have all the required numbers and you can easily go ahead and do it. Understood or not? I would always strongly recommend you to do the working note. Whenever there is premium involved, we will divide the amounts due and amount receivable into say a share capital portion and securities premium portion. Now, excess application money per share is what, my dear children? Whatever excess application money was there to be adjusted against allotment, which is 4 lakh in this question, divided by the total number of shares that were allotted on pro-rata basis, which is 80,000. So 4 lakh divided by 80,000, which is 5 rupees. Allotment money due per share, as I said earlier, if there is premium involved, we are going to bifurcate it into premium and capital portion. Securities premium. Understood. The share capital portion is 10 rupees and premium portion was 5 rupees from the question. Now we have 5 rupees as excess application. That will be set off against what, my dear children? The share capital portion of 5. So 5 rupees capital is receivable. And the entire premium 5 rupees is receivable because there is no excess application money to set off against it. So what would be the call scenarios? It is the number of shares held by Seema, which happens to be 4,000 in this question, multiplied by the total call scenarios, which happens to be 10 rupees. This 10 minus 5, which is equal to 5, and this 5 rupees together making 10 rupees. The total call scenarios of Seema would be 4,000. Seema holding 4,000 shares, right? The number of shares held by Seema 4,000 into 10, which is 4,000 into 10, 40,000. Understood or not, my dear children? So now what do we got to do? What do we have to do? Just pass a journal entry for receiving allotment money with call scenarios, right? So there will be call scenarios account also will be debited. So bank account debit, calls in arrears account debit, to share allotment account, allotment money received. Now, when we are receiving allotment money, the first thing that we got to do is credit the allotment account with the amount due minus the excess application money. Whenever there is excess application money, that will be subtracted and the remaining amount only will be credited to the allotment account. So that is 8 lakh rupees. Calls in arrears happens to be 40,000 as computed by us in the working note. And therefore, bank account will be 8 lakh minus 40,000, which is 7,60,000. Understood or not, my dear children? Now moving on to the next journal entry where we make the first call due. So journal entry is share first call account debit to share capital. There is no premium, so it will only be share capital account. Share first call mean due. As we have not forfeited any shares till now, we'll make it due for the entire set of shares that were allotted. We allotted 80,000 shares and first call is 15 rupees per share. So 80,000 into 15 rupees is the amount that will make due. So 80,000 into 15. 80,000 into 15, 12 lakhs. Now in first call, a lot of things happens. One of the shareholders did not pay first call amount and another shareholder, who's that shareholder? Seema, paid the first call amount along with, paid the allotment money along with first call amount. Understood or not? And allotment is right now sitting in what calls in arrears account. Understood? So bank account debit. Calls in arrears is getting debited because one shareholder did not pay calls in first call, so calls in arrears will be debited to share first call amount. Share first call money received. Understood? Now, Seema paying that excess application, that amount due on allotment along with first call, that I'm going to do in a separate job. Understood? Where is that money sitting? Whatever Seema had to pay along with allotment, where did we put that amount? We put it in calls and arrears account. Am I right? So that amount is sitting in calls and arrears account. I'm going to debit calls and arrears account now that Seema has paid it. Sorry, credit it and debit bank account. This is Seema. This journal entry is for Seema paying her calls and arrears. I'm doing it separately. You can also do it together. Okay. Calls in arrears. Seema's allotment money received. Understood or not, my dear children? So now, share first call will be made due for the entire will be credited with the entire amount made due, which is 12 lakh. One shareholder did not pay first call money, right? Who's that shareholder? Who's that shareholder? It was Sahaj. Sahaj, who had applied for 2,500 shares. They have not given the number of shares that Sahaj is holding. They only given the number of shares applied by him. Am I right or no? Failed to pay the first call money. All right. So we'll have to first find out the number of shares held by him. That's very simple, as I told you. Multiply and write the number of shares applied for by the shareholder. And then in the denominator, write the total number of shares on which pro-rata allotment was made. We received 1,20,000 applications. We rejected 20,000 applications. And so we are left with 1 lakh applications. On these 1 lakh applications, only pro-rata allotment of 80,000 shares were made. So 1 lakh in the denominator. And the number of shares allotted would be written in the numerator, which happens to be 80,000, sorry, 80,000. So total number of shares allotted. Now this will help us find out the total number of shares allotted to Sahaj. So you multiply and write his applications and then total application in the bottom on which pro-rata allotment was made and the total number of shares allotted in the numerator. So what happens now? You got to cancel it. The 4 zeros here gets cancelled and the 4 zeros here gets cancelled. You have to do it, my dear children. Cancel this 1 0 gets cancelled with this. So what you're left with 8 into 250. Am I right? So 8 into 250 is 2000 shares. So Sahaj was allotted 2000 shares and Sahaj failed to pay the first call money. So 800 in, I'm sorry. How much was the first call money? First call money was 15. 15 into 2000. The number of shares held by Sahaj that we just computed. 2000 into 15. So the amount received on all the other shareholders, including Seema, would be 11 like 70,000. Along with that, Seema also paid something else. What did she pay? She paid the first call money. Am I right or not, my age? Allotment money. Am I right? So what was due from her on allotment? It was the 40,000 we had debited calls and arrears account with, which she had defaulted. That also she paid now. So 40,000 she paid. So now that's set straight. Next journal entry would be to what? Make the second call due, I believe. Yeah, make the. Oh, no. Final call was not made. It's given in the question that final call was not made. So we're not supposed to make the second call due. We are supposed to forfeit Sahaj shares and reissue it to Geeta for ₹60 per share. So let's go ahead and forfeit Sahaj shares. Is premium involved? Yes, premium is involved. But has Sahaj paid the premium amount or not? Sahaj only did not pay the first call. Okay, and premium was receivable along with application and first call. So Sahaj has actually paid the premium amount. He has not paid the capital portion of it. If premium amount has been paid, it wouldn't be touched. It wouldn't be touched. So the journal entry will be share capital account debit to share forfeiture account to calls in arrears account. Sahaj shares forfeited. What are the total calls and arrears for Sahaj? It is 30,000 that we just debited to calls and arrears account when we receive the first call money for everyone. And share capital will be debited with what amount, my dear children? Amount called up into number of shares forfeited. The capital portion of the amount called up into number of shares forfeited. Number of shares forfeited is 2000 and the amount called up is what, my dear children? As capital. In application, we had called up 15 rupees. In allotment, we had called up 10 rupees. It's 15, but there's 5 rupees premium. You're not supposed to include premium part. So 15 rupees minus 5, which is 10 rupees. And in first call, we had called up 50. We haven't made the second call yet. Am I right or not, my dear children? We haven't made the second call yet, so that will not be included. So the called up value per share happens to be 15 plus 15 plus 10, which is 40. 40 rupees. Am I right, my dear children? So while forfeiting, we'll only debit this account with 40 share capital account. So that is 2000 into 40, 2000 into 40. And what will be share forfeiture? It is 80,000 minus 30,000, which is 50,000. Whatever he has paid. Understood or not, my dear children? Now, the shares are also reissued. I hope they're reissuing all the shares. Yes, Charles shares are forfeited and reissued to Geeta for ₹60 per share, ₹50 per share paid. Understood? So they're reissuing it at a premium. Whenever we reissue at a premium, what is the journal entry for reissue? It's bank account debit to share capital account to securities premium account. If it is discount, share forfeiture account will be debited with the discount amount. If it is premium, securities premium account will be credited with the premium amount. Shares reissued to Geeta. And they were reissued for 60 rupees, right? So 60 into 2000, 1,20,000 number of shares reissued into reissue price. And share capital will be credited with the face value called up or what it was fully reissued as. It was reissued as 50 rupees paid up, right? So 2000 into 50. And the remaining happens to be what, my dear children? 2000 2000 into 10, which is the premium portion. And then we got to pass a journal entry for profit on reissue. As I told you earlier, if all the shares are reissued, the journal entry for profit on reissue is very simple. You don't have to do any working note of any kind. Only in case of partial reissue, you have to do working note to capital reserve account. It's the amount you credited to share forfeiture account while forfeiting, that is a profit on forfeiture, minus the amount you debited to share forfeiture account while you are reissuing, which happens to be the loss on reissue. And there is no loss on reissue because we have reissued the shares at a premium in this question. So share forfeiture to capital reserve, profit on reissue. So as there is nothing to be subtracted, the entire amount received as profit on forfeiture is the profit on reissue too. And with that, we've come to the end of this problem. My dear children, please do share, like, subscribe, and all if you really found these videos useful. I'll be uploading videos from all the chapters, all the previous year board examination question. I'll classify them as chapters and classify those problems classified as chapters into topics, and then I'll be solving them and uploading them. Please do share and subscribe and make this channel known to your friends. You people have fun. Okay. Before you go, just one more thing. I'll show you the solution given by the CBSE also. All right, my dear children. So this is the solution given by the CBSE Bank to Equity Share Application 24 lakhs. All of this we did correctly. And when you come here for the calls and arrears part, they debited and credited calls and arrears. The first call calls and arrears is for Sahaj, which is 30,000, and second calls and arrears, which is credited, is for Seema for 40,000. But we did it as two different entries. In order to make it easy for you and to make it clear for you, I did it as two entries. They've done it here like this. You can either do it like this or the way I did it. The numbers are the same as we have computed, and everything else is same. Am I right, my dear children? Okay. So with that, we have come to the end of this video and do everything that I told you to. If you like these, share, subscribe, like, and all that. People take care, have fun till I meet you with another problem from another question paper. Till then.